A private equity firm buys a chain of veterinary clinics. Another acquires dozens of plumbing companies. Next is your dentist or your AC guy, even your local car wash. It feels like every good business in America is getting swallowed whole. But here's what nobody's telling you. There's a giant blind spot in their buying spree, and it's exactly where a regular person can still win. You've seen the headlines. Private equity is buying up apartment buildings, clinics, accounting firms, manufacturers. The list goes on. It's easy to think individual investors don't stand a chance anymore. But that story is only half true, and the missing half is where the real opportunity hides. What exactly is private equity? These are firms that raise huge sums from pensions, endowments, and wealthy investors. Then they buy private businesses, not stocks. The plan is simple. Buy a company, grow it fast, and sell it a few years later for a lot more than they paid. Speed is the whole game. Here's the catch. Most PE funds only have 3 to 7 years to cash out. That single deadline shapes everything. Which companies they'll even consider, and how hard they'll push to squeeze out profit. A ticking clock, not patience, drives almost every decision they make. Over the last 2 decades, trillions of dollars poured into private equity. Investors believed private companies could outperform the stock market, but all that cash created a problem. Money sitting idle earns nothing, so firms went hunting aggressively for anything they could buy. But private equity isn't buying randomly. They want predictable recurring cash flow. HVAC companies, plumbing services, insurance agencies, software subscriptions. Businesses where the money keeps coming in every single month. Predictability means easier financing and lower risk. It's a formula, not a shopping spree. They also love fragmented industries, ones with thousands of small, independent owners. Instead of building one company from scratch, they buy dozens and combine them. It's called a roll-up. One plumbing company becomes 10. 10 become 50. Then they sell the whole thing for a massive premium. Most of these deals run on borrowed money. Strong cash flow lets the acquired company pay off that debt while still turning a profit. That's why volatile, unpredictable businesses scare private equity off. If the cash flow wobbles, the whole debt structure can collapse. Here's the blind spot. Private equity ignores owner-operated businesses, companies under $1 million in revenue, rural businesses, and niche local services. Too small for a $1 billion fund to bother with, but large enough to completely change one family's financial future. That's the gap. Owners don't always sell to private equity for the highest price. They sell for certainty, a professional team, fast financing, a quick close. Some even keep a minority stake, so they profit again when the firm eventually sells. It's not about money alone, it's about ease. Private equity isn't without controversy. Critics point to aggressive cost-cutting, heavier debt loads, layoffs, and rising prices, all in the name of hitting short-term returns. Not every firm operates this way, but plenty have built reputations for squeezing value out at the expense of employees and customers. Here's your advantage. Private equity might own a business for 5 years. You could own the same kind of business for 20. That one difference changes everything. Instead of chasing the next quick sale, you can build something durable enough to support your family for decades. The real opportunity sits between $200,000 and $750,000 in annual owner earnings. Too small to matter to $1 billion fund, but big enough to change your life completely. Institutional money almost never shows up here, which is exactly the point. So, copy the formula, not the competition. Look for recurring customers, consistent cash flow, low customer concentration, a strong local reputation, and clear room to improve operations. Private equity already proved these traits create value. You don't need billions to use the same playbook. Private equity isn't buying everything. It's buying what fits its model. Thousands of great businesses change hands every year with no institutional buyer in sight. You don't need to outbid the billion-dollar funds. You need patience and the willingness to look where they're too big to notice. If you want to know exactly how to find one of these businesses, subscribe. That's what this channel is built for. Thanks for watching. This is The Solo Investor.